Liontown Resources today has announced an agreement with leading global EV maker Tesla. Of course, whenever an ASX company announces an agreement with any leading US player, it attracts a lot of attention. But Tesla in particular, leading the way for this EV transition around the world, is always going to make investors sit up. And so today we're going to unpack the ASX LTR story. We'll talk about the agreement with Tesla and what it could mean for Liontown moving forward. But then also at the end of this video, we're going to unpack 4 different themes that I think shone through, both for the Liontown story out of this agreement, but they also can be used to apply a different type of lens when we're observing other lithium companies and the potential offtakes that they make moving forward. It is a milestone day. It's a significant announcement. Of course, along with their prior LGES agreement, it goes another way to de-risking the project as they look to bring online their Kathleen Valley project. It's a tier 1 project. It's got a top quality resource, high grade. It's a significantly large resource as well, and it's got really good OPEX too. So it's going to be a fascinating story. Keen to know your thoughts. Drop in a comment below. If you enjoyed this video, don't forget to hit the like button. If you're new, make sure you've subscribed. Turn your bell notifications on so you won't miss any of those daily episodes. Well, I guess before we unpack the 4 different themes that shone through from the announcement, probably makes sense for us to talk about this actual lithium deal with Tesla. So the wording surrounding it is it's for a legally binding sales and purchase term sheet, otherwise known as an agreement, for spodumene concentrate. Initially, Liontown will be producing SC6, but of course they've got aspirations to go further downstream, and they're at the PFS stage at the moment in investigations for a lithium hydroxide processing facility. Their initial nameplate production will be at 500,000-ish tonnes of SC6, but they do have aspirations to lift that to nearly 700,000 over time. This deal with Tesla, it's a 5-year term to commence in 2024 when they're hoping to get their production online. They have recently completed their DFS at the back end of last year, it's worth noting. The deal has similar types of terms to their LGES agreement, which we'll talk about later on. For the first year, 100,000 dry metric tonnes, uplifting to 150,000 dry metric tonnes. So that alone is around about just below a third of the production in the initial stages for LTR. Interestingly, they'll be using pricing based on a formula-based mechanism. Of course, there's been a lot of static pricing initially, but as the elevated prices start to rise, I think we're starting to see more variable pricing models. These agreements are contingent on production by 2025, and it is worth noting that the negotiations are expected to be completed, executed, and delivered by the 30th of May 2022, so there is a few months to go. And so, of course, that just builds on the initial offtake that Liontown signed with LG Energy Solutions. LGES is, of course, a subsidiary of the leading global player, LG. They have got a huge scale. They're a leading player in Asia, but they're also one of the world's leading global battery makers. So interestingly now, they've tied up one of the largest EV manufacturers and one of the leading global battery makers. So they really have targeted those top tier companies to partner up with and really have some cornerstone foundational offtake partners. Of course, this is for another 100,000 scaling up to 150,000. That combined at full scale will be 300,000, but it still does leave the opportunity potentially for a third offtaker, as well as the opportunity to maybe sell into the spot market, which is something that Liontown have discussed that they'd be interested to do. It's going to be an interesting story to see where it all plays out. Before we dive into the rest of the video, standard disclaimer, as you guys know, I'm just a bloke on the internet who likes talking about stocks. Obviously, nothing we talk about is financial advice. The stocks we cover, they're not buy recommendations. Hopefully it is an interesting starting spot, however, for you to go away and do your own research from. So with that, Liontown Resources have now got 2 offtakes in the bank. As mentioned, there's still potential upside and optionality with some other agreements or selling into the spot market that they'll continue to pursue. Stage 1 is really unlocking that potential for Kathleen Valley. It's a tier 1 global resource. As mentioned, it's a huge resource. It is high grade. So they really want to be able to maximize that, scaling up their production from around 500,000 tonne per annum to around about 700,000 TPA for throughput. Of course, they're continuing to look at the opportunity to uplift the resources and investigating at Buldania as well. But that second stage is where it gets really exciting when they look to capture more value in the value chain there, the potential of downstream expansion. They're investigating the opportunity to develop out a lithium hydroxide processing facility. That's at the PFS stage now, but as we do know, there's been a big focus over this past period to localize supply chains and to capture more of the value chain as well. Traditionally, a lot of the spodumene producers in Australia had produced, and then these had been exported into Asia before that was processed and converted into the chemicals. But we're seeing this transition slowly beginning, and Liontown Resources are hoping to feed into that. And so here were just 4 different themes that I thought were interesting to take away from the agreement today. I think it speaks more to the broader lithium landscape rather than just being isolated to this agreement with Liontown and Tesla. But of course, each of these have interesting implications not only for this agreement, but the rest of the companies in the sector too. I think first and foremost on the offtake front, as we discussed at the top of the video, variable pricing mechanics are now being sought by producers with the elevated prices. They want the opportunity to have that exposure to the uplift. And so it's going to be interesting to see more and more companies try to play into that. I know Lake Resources have previously talked about trying to pursue a variable pricing model as well. And I think what's important as well is that major cornerstone offtakes are being sought, but also with the consideration of the ability to sell into the spot market. We've obviously seen the success of Pilbara and their BMX auctions, and I think this is going to be another mechanic that more and more companies look to feed into. And then just thinking about the downstream too, as we talked about, producers, they're looking to capture more of the value chain. Obviously, the further downstream you go, the more ability to refine, to process, you're able to capture more margin, and this is ultimately going to enhance profitability opportunities. But it's also worth noting as well that over this past period, we've seen significant focus on localization and onshoring of supply chains. Helps to build resilience out into supply chains. Of course, it means you're more resilient to any exogenous shocks, any geopolitical tensions as well. I think this is definitely something that's worth continuing to consider. On the M&A front, this didn't come directly from the discussion with Tesla, but I do think that we've seen just over this past period, FMG have reported, BHP of course reported yesterday, and they've shown they've got significant war chests ready to deploy, and they're also looking towards future-focused industries. BHP have highlighted that. Of course, they've been pursuing different types of opportunities, most notably Noront Resources in Canada on the nickel front. We only have to look at Rio Tinto, who of course have recently just made an acquisition play for a Ridden Lithium Project. And then FMG, they haven't highlighted specifically lithium, but they've got their future-focused industries. And so, of course, these major iron ore producers are looking into these opportunities, but there are many other major resource companies as well that are going to try and dip their toes into the future, where the opportunities is, and try to get exposure to this clean energy megatrend that we're seeing unfold. It's also worth noting as well that Buldania is a very attractive alternative second resource. It gives Liontown optionality. Potentially, if they bring on the downstream lithium hydroxide processing facility, obviously the more feedstock, the more concentrate you're able to produce. That means you can scale up the downstream. But there is also going to be a lot of eyes on Buldania too. It's got a 15 million tonne resource at the moment. It's further drilling now and there's resource upside there. But I'm sure there is discussions that there could be some potential opportunities for M&A there, or at least some further considerations. And then finally on the quality front, we've talked about the quality of the deposit that Kathleen Valley is. But we know that OEMs and manufacturers want the best quality product, and they also want that ESG benefit or upside. As we move towards a net zero society, and these producers want to move towards carbon neutrality, they need to bring down their total embodied energy. Liontown have highlighted that at startup, they want to be using 50 up to 60% renewables and continue to scale that towards net zero. And it's obviously been evident that their tier 1 resource is attracting tier 1 off-takers, with LGES and Tesla in their own rights, both being leading global players. And so just thinking about the ASX LTR pathway up ahead, of course, at the back end of last year, they raised $450 million worth of capital. So they're continuing to work towards a development and ultimately move towards construction for their project. Obviously, they've got their FID, hopefully by the first half of this year in 2022. They've now got 2 offtakes into the bank. And then as they move towards construction and ultimately potentially production in hopefully the first half of 2024. They've got a defined pathway, they've got a good quality resource, and now they've got some off-takers that go some way to de-risking the project. It's going to be very interesting to see where Liontown, as well as the rest of the lithium sector, heads. If you've enjoyed the video, like, subscribe, turn your bell notifications on, drop in a comment, let us know your thoughts on this landmark agreement and where you think the rest of the lithium sector heads. We've interviewed a range of different ASX listed CEOs over this past period, many in the lithium sector, so we'll leave links to those up above that you can check out after this one. Thank you so much for joining us. For now, stay well and happy investing.